Hey everybody, Lawrence here from the financialthing.com Thursday evening for you in the UK and wherever you are in the world. It's live stream time. I hope you. Oops, hold on one second. Don't want that. Hope you can hear me well. Thank you to everybody who's joining us this evening. We have a very special guest who is going to be coming on. You know, you've heard me talk a little bit about a new peer-to-peer, very niche lending company that I've sort of been keeping my eye on. I haven't invested any money yet. Of course, complete transparency here, but obviously this company is involved in the cryptocurrency space, which, you know, I talk a lot about on the stream that I really am a big believer in. And we have Ben Thomsen who's going to be joining us. I hope I didn't butcher that name, but he's one of the co-founders of Lendary, which is a German-based peer-to-peer lending company that is crypto based, and he's going to kind of come on and explain exactly what they do and how they do it, because this is definitely a new niche way of investing, and it's something I'm very interested in learning more. And I have spoken to the other co-founder. His name is Frank, in the past, probably about 2 months ago, but Ben is going to be heading the operations for Lendary. And I know some of you on the stream have been interested in, you know, you're always looking for new places to invest, and obviously we want to do our due diligence and make sure this is a safe place, or relatively safe. Obviously there is always investment risk and everything, but we want to make sure we can get as much information as we can about these peer-to-peer lending companies, because that's what we do at financialthing.com. And hopefully you can hear me well. Thank you to everybody that is here every week. You're very loyal watchers. Give me that thumbs up if you can, so I don't have to bug you. It helps with the YouTube algorithm. And subscribe to the new channel. As you know, the last channel was banned by YouTube. It continues to be banned. I've appealed 2 times. We're going to appeal one more time so we can get the channel back. But non-cryptocurrency friendly YouTube decided to remove the channel, so now we have to rebuild from zero. So thanks to everybody that subscribed, resubscribed. I know, I really appreciate that. And yeah, so let me bring on Ben here, and hopefully you guys can hear him okay. There we
Hello, everybody.
go. That
Hello
is
and welcome.
that is Ben. Thank you for joining us, Ben. You're
Of
over
course.
in Germany, right? Tell me what.
Exactly. Southern Germany, just south of Munich. Thanks for having me on. It's quite exciting. Happy to have a good chat tonight.
Yeah, absolutely. We're gonna chat about everything sort of to do with cryptocurrency and what it is that you're doing, because you're doing something that's very different. So just before we get started, so I have to ask you this. The guy that I spoken to before, Frank, was one of the co-founders, and now he sent me an email a couple of days ago saying that you're the person that I should speak to, because he is going to be working on a different project. Can you explain what is going on with Frank, and why am I speaking to you, Ben, instead of Frank?
Of course, of course. I mean, maybe let me give you a little bit more about our background and how this whole
Hmm.
thing came together, I guess.
Sure.
Frank and I met during our time at a strategy consulting firm. We both started sort of our professional careers at BCG, both in Munich. That's where we first met. And as it happens, at some point we were working on the same project, just sort of like exchanging ideas, and quickly sort of noted, okay, we shared the same passion. And at the time, it was 2014, I believe, AI was the big buzzword. We were all working on these digitization projects for large companies, who all felt the need to, oh, we need to be innovative now, and machine learning, we need to do something with it. So we were sort of producing all these use cases and doing all this research, and then stumbled upon a really cool blog post on the blog. It's called Wait But Why. You've probably heard about it, or if you haven't, definitely go check it out. It's great.
Wait, we'll say
Um,
that one more time. What is it called?
it's waitbutwhy.com.
Waitbutwhy.com. Okay.
Yeah, can highly recommend. It's
Okay.
interesting stuff, but also in a really entertaining way.
Hmm.
And we both sort of like fell in love with the topic, and as many probably said, okay, we have to do something with AI, machine learning. And on the weekend, we would sit together and sort of brainstorm, okay, what can we do? And one thing you need for machine learning and AI is data. And where do you have a lot of freely available data? Financial markets. So that's sort of like how we came across the financial markets in the first place, and basically just started building our own little trading bots for sort of like our pocket money, also in a really like tiny niche market, and started trading. So our sort of like financial exposure stems from the trading side, actually. Um, that started, it went fairly well, and quickly, as it is in consultancy, the idea list grew a lot faster than the sort of like task completed list. And then at some point we said, okay, screw it, we'll have to try this out, and we quit our jobs, started to work in this whole on this thing at first with no real commercial ambition. Really, it was just curiosity, and we wanted to sort of see where the road takes us. But eventually we continued in that whole algo trading realm, I would call it, and quickly gathered some interest, and then said, okay, we should give it a crack and start sort of like a traditional fund. But at the same time, crypto really became bigger. That was 2016, 2017. We started to trade our strategies there. Quickly noted, okay, hey, stuff really works out here. Probably because markets are fairly small, largely driven by retail traders back at the time. So the simple statistics that we deployed were quite effective, and yeah, ever since have been stuck in the crypto space and been following that. And yeah, based on that, eventually Lendary grew out of that. I'll talk about that in just a moment. But maybe that's sort of like Frank and I go way back by now, have been sort of like doing our little startup story for 5 years now. And now is sort of like a time where we sat down the last couple of months, really sort of took note of where do we stand, what roles are we pursuing really, and are we the right person to fit that role? And also we noted, okay, I'm really super passionate about this whole new financial market, if you want to call it that way, and sort of like being the bridge builder between the traditional world and the new opportunities that arise in this crypto space. And Frank was always more of the sort of like sales guy, visionary guy, always looking for new ideas, always bringing new innovative input. And we sort of like, based on our experience in the traditional asset management world, where it's really about trust, like the whole sales side, it's so much more about trust rather than just having a great idea or a great track record and stuff like that. It really boils down to trust. And both of us, neither of us really had the pedigree of like 10 years of Goldman Sachs or existing client bases that we could work with. So we eventually decided, okay, Ben, you've been in charge of the product all along. You go, continue to do that, and then we'll look for partners who bring that pedigree for the whole sales cycle thing, and that's sort of like where we stand now. And Frank is pursuing new ideas in sort of like the business networking space combined with video stuff. So think about it like LinkedIn combined with TikTok, along those ways, something like that.
Okay. So, and again, if you just joined us on the stream, this is Ben Thomsen. He is the one of the co-founders of Lendary, which again is a peer-to-peer lending company based out of Germany that I've been looking at for a little while inside of the cryptocurrency space. And we're going to kind of talk about what exactly Lendary offers to investors. One of the main things is, we're going to talk about trust and also, by the way, if you have questions out there and you're watching, you want to know more, pop them in the chat. I'll put them to Ben live. Ask him anything you want. He's very transparent. He's willing to answer whatever you want. One of the things that has popped up very early on, and you probably have heard about Lendy, the company in England. I hope you've heard about that, and how your name is very closely tied to Lendy. So how do you feel about that? That you kind of got this very close tied name. Is that
Uh,
bothersome?
Not really, to be honest. I mean, the funny thing is, we really don't have any sort of like, we don't come from the traditional peer-to-peer world at all. And you'll probably hear in a moment why that is. I think Lendary really is its own niche in peer-to-peer lending, if you want to call it that. And so when we sat down and thought about this whole like platform we were building, we were thinking about names the traditional way. We would just open a Google Sheets. Everyone would sort of like type in their things, and then we would eliminate one by one. And then, as you do these days, you simply check, okay, which domains are still available, and then we stumbled upon Lendary. We liked it, and to be honest, like we chose Lendary, and only then we started realizing, okay, there's this other platform called Lendy, and also we realized we sort of made one stupid mistake with the name. If you type in Lendary into Google, it will autocorrect to Legendary all the time. So we really have to push our SEO rankings to fix that.
Yeah, I noticed that. So, Ben, so tell me, what is Lendary? Give me a very short version, because obviously we don't want to. We got limited time. We have a lot to get through. So tell me what exactly, on a very basic level, your company does.
Absolutely. So Lendary really is an automation software. We see ourselves as a software business. Actually, we help clients onboard to this really cool opportunity. And what we're talking about is providing peer-to-peer loans to other traders who simply do one thing with that loan. They trade leveraged in cryptocurrencies. So that's also already one clear distinction. It's really purpose bound. It's only for leverage trading, and it's only on a single platform. And it's the platform is called Bitfinex. That's actually where the money sits, also of our clients or users, if you want to call it that. We never have access to the money of our clients. We only automate the entire process, and we sort of like guide them through the whole experience of coming into this world. It's really the bridge builder. But coming back to the original sort of like where does return come from here? So this business is actually, I don't know, 50 years old. Leverage trading has been around for years and years. And traditionally, traders would go to banks and brokers to get their margin, so that they could trade with a lever. And
now hold on. So not everybody who's watching may understand what you're talking about. I'm going to break it down into very simple terms. That would be like saying, I want to borrow X amount of money, and I'm going to put up X amount as collateral. So I put up £100 to trade. The bank is going to say, we will match your £100. That would be leveraging at 2-to-1, correct?
Exactly.
Okay,
exactly.
so that's what leverage trading is. So
that's what leverage trading is.
Yeah.
Exactly.
Yeah.
And so traditionally, the counterparties of that 100 sort of loan, if you want to call it that, were banks and brokers. And when this whole crypto space started, I mean, all these crypto exchanges are basically tech startups. They don't have a lot of people. I mean, it's really small tech, by now fairly large, but still tech companies. And they at least didn't used to have these massive amounts of capital that banks and brokers had to offer that kind of leverage as a loan to their users. So they thought of something clever, and they basically established a peer-to-peer lending market on their platform only for that purpose. So now what you can do is there's traders willing to, or they're really bullish on Bitcoin, and they say, okay, I have my $1,000 and I believe in Bitcoin even stronger. So I want to use $2,000. Where do I get the other $1,000? I can use the Bitfinex peer-to-peer lending market because some other person is willing to provide their capital. And the interesting thing about this is all of a sudden you have what we call an order book dynamic. It's really supply and demand. The interest rate that is being sort of set up for this loan is completely flexible and determined by how much is being demanded and supplied at a single time.
Okay. And there has to obviously be risk with what you're doing. Now, tell me about, first of all, who can invest in Lendary? Is this something that anybody in the world can come to your platform, put money in, or has to be EU based? Can the UK people invest in it? Could I invest in it?
It's almost global. Although US citizens are currently restricted, and that's not because of something that Lendary does, obviously,
right.
but it's rather related to Bitfinex terms of services and stuff like that. So because they had their quarrels with them sorted out by now, but still, I think US is always difficult when it comes to investing and stuff like that.
Yeah.
So anyone except US currently. And then talking about risk, absolutely, that's the important thing we really have to consider. I always differentiate two types of risks when talking about this investing opportunity. There's the sort of like investment specific or loan risk, or call it default risk. That's I guess in the peer-to-peer world the key risk you would want to watch. And the other one is counterparty risk. And let me break them down for you quickly. The default risk, I think, is somewhat close to zero, actually, and that has nothing to do sort of with whether that the traders are always right in their ways of investing, but rather how these loans are secured. So the cool thing about having purpose-bound loans, so loans that only serve a specific purpose, in this case, means you have real-time transparency on what's going on. So since cryptocurrency markets are operated 24/7, there's always trading going on. You always know exactly what's happening with that loan that is being used in some long levered position. So someone used the loan to buy Bitcoin, and you know exactly whether that Bitcoin position is going well or bad for that investor or for that trader. And then that's one aspect. So you have real-time transparency, and with that real-time transparency, these platforms have established what's used to be this margin call. There's movies about that and stuff like that. It's when the bank calls you and you have to quickly pay up, otherwise we'll have to close up or we'll get your house or whatever.
Well, that's what happened to Mr. Huang recently, right? With his $30 billion loss in 4 days. They called for the margin, said you got to pay up.
Exactly. That margin call, exactly. And these days on these platforms, this whole process has been automated. So it's not like you get a call, it's just simply liquidated. So and they do it in a really sort of risk-averse fashion, because they have a really high threshold or low threshold, if you want to call it that. If a position for a trader does not go well, they will liquidate it fairly soon. Quick example, if you say you have $100 and you borrow another 100, so you open up a position of 200. So this means theoretically the position that you entered can drop by 50%, and then you would have lost all your collateral and barely can return sort of the loan. So 50% is what the price movement could be in that case. Bitfinex would liquidate that position already at 15%. So once the price drops by 15%, position would be liquidated, the loan would be returned, including the interest. So that's the credit default side, and also how it's protected. So this is actually not something that Lendary does. It's inherent to the platform at Bitfinex. Which kind of brings me to the second part, which is counterparty risk. I mean, we already talked about trust. That's always a big thing in investing in general. And again, this is a fairly new space. Cryptocurrencies is fairly new. There have been lots of scams, stuff like that. So you really want to do your due diligence on where do you put your money. In this case, it's Bitfinex, which is one of the largest cryptocurrencies exchanges. It's one of the most advanced when it comes to all the technical things and sort of like innovations. They're by far the largest market when it comes to this kind of peer-to-peer margin funding. That's also how they call it. But that's really where I would say do your due diligence and sort of appropriately adjust. If you're interested, sort of like try it out, see, are you comfortable with having your money in the crypto world at all? Then you might as well have it on Bitfinex, in my opinion. But that's definitely something that you want to have a look at. Okay. So these two things.
And tell me, and we're going to talk more about risk again. If you have questions, put them in the chat. I'm going to go through them as I see relevancy, and then at the end too. So stay with us for the entire stream, because it is a little bit of a different peer-to-peer lending model than what we've seen. Absolutely. Because we always invest on asset base most of the time, so there's some kind of usually property backing the loans, which doesn't always work out well. It hasn't in some of the companies that have gone out of business. So I'm always looking for how can that risk be reduced. And I do like the auto triggering of when a trader's position is not going well, it automatically gets closed out by the platform itself. So just answer me this: what kind of rates of return do investors see through your platform?
So traditionally, or just looking at the historic performance, each year has yielded double-digit returns. So as low as 10.3% in the worst year, which has been 2018, sort of what's called the crypto winter, if you want to call that, and as high as above 30% in 2017. And the past years were, I think, 13% and 14% respectively, 2019, 2020. And so far, first quarter trajectory continues. So I think we're on track, sort of 12, 13% again. So that's kind of where it settles. However, if you go check out sort of like the historic interest rate development, you'll notice that it's really, really volatile. As I said before, it's really comes down to supply and demand. And what we realized is we think that's just sort of like our speculation, or that's how we look at the market. We think that the demand side is a lot more reactive than the supply side. So when crypto prices go crazy again and volatility really picks up, traders immediately have appetite for leverage trading. They demand a lot of capital because they see opportunities to make some profits, and the supply side can't keep up. So in that case, you'll have spikes. You'll have interest rates going up to like 50, 60%. Now, here's another distinction, I think, to traditional peer-to-peer lending. Keep in mind that this position, a trader might only hold this position for like 5 minutes, 10 minutes, 2 hours, and the interest is being calculated based on the seconds like this loan is actually used in the position, and then it's being returned. So it's not like you sort of like sign a contract and then your capital is deployed and locked away for 1 year. It's fairly liquid. So that's another thing. So you'll have these really volatile rates, but in the end, you can expect around, I don't know, 12, 13%, maybe a little less, maybe a little more.
It's kind of balancing out because of the volatility of what's going on in the trading. So within peer-to-peer lending, we have this big problem, which is looking at the actual borrower itself. Are they safe? Who are they? Now, am I correct in understanding you don't have to worry about that because the trader is putting up cash collateral to cover their loan, right? So there is no vetting of the borrower.
Exactly. Actually, we don't even know the name of the borrower.
Right.
So yeah, I guess it's kind of crazy if you think about it, but it's really it's all being handled by technology. It's a matching platform on this exchange, and since it's purpose bound, they can't take that money and go buy a car with it. They can't withdraw money from the platform unless they closed out all their sort of margin positions. And that's another thing. That's why we think that the inherent credit risk is really low, because it's sort of just by definition it's bound to the platform. It's super liquid, like the sort of like the security backing the whole loan is super liquid, always tradable, and also short duration. So that's where
some
it
big
all
benefits.
comes together.
So I'm going to break this down again into very simple terms because there may be people watching that have no idea what we're talking about. So me as an investor, I'm going to loan, let's say you're the trader, Ben, okay?
Yes.
I'm going to loan you, I don't know who you are, 100 euros or 100 pounds, whatever you want to call it. You then have to put up your own cash of how much would you have to put up out of, if you're borrowing 100 from me, what do you have to put up?
Kind of depends. It depends on the liquidity of the asset that you want to trade. Bitcoin is super liquid, so you can use up to 5 times leverage. So in that case, I would only have to bring 20. For other assets, it's between sort of like 2.3 up to 5, I think, is the leverage maximum. So around that.
So you're saying that you would only have to put up 20 euros
Correct.
to borrow from my 100.
Yes.
Now, if your trade goes bad, how do they make you cover that giving me my £100 or €100 plus my interest back? How do you pay that to me?
Because it's so once I borrowed the money from you, I have 120 in my balance, correct? And now I open a position of Bitcoin, for example, worth at that time $120. Now the market price moves. like the Bitcoin price might increase, the value of my position would increase to 140. If I close my position, no problem in giving you back your money, right? So now that's the easy case, the simple case.
Yeah.
What happens if the money, if the price goes down? Now I can measure in real time what the value of that position is, and we both know. I mean, fairly simple. Like if the position would only be worth 90, I wouldn't be like. Not only would I have lost all my own cash, my 20, but I would not be able to pay you back your 100 plus the interest I owe you.
Right.
So what happens is, as I measure sort of the real-time value of the position, the platform will automatically liquidate the position once I get close. I mean, the math is fairly complex behind it. We can you can look it up in the FAQs. Probably once that position reaches a level of, let's say, 106 or 7 or so, the position would be liquidated without having me, like the trader, actually wanting to close the position, because the platform says, hey, you're at risk of not being able to pay back your loan. We'll close the position at 107, for example. That means I'm still able to give you back your 100, the original loan, plus the interest I owe you, and then I'm left with, I don't know, peanuts. That's how it's
so
made.
what I'm not understanding is if I loan you 100 and you only have to put up 20 of your own liquid cash, where is the money coming from that you're going to repay if your trade goes badly as a trader? Is it pulled automatically from your credit card or from your? I don't understand it.
It's always on the platform. So I the trader puts in 20 of his own money to Bitfinex. It's at Bitfinex. Now I borrow 100 from you. So now my sort of like Bitfinex balance is at 120. The mechanism we described before would never allow that balance to drop below, let's say, 103, for example. So of course, let me disclaimer here. Theoretically, it's of course possible that this happens. That would be the case if you have sort of like just an implosion. The market doesn't exist. No more trading at all anymore. Still, if you look at the COVID crash last year, March 12th or 13th, I think it was, Bitcoin, I think, crashed like 30 or 40% within an hour. Not a single default, not a single impairment on these kind of levered trades. So again, it's not like the money to pay you back is always there. That's sort of like the core idea. It never left the platform, and like so theoretically, the trade must go so bad that the position cannot be liquidated, or whatever is being liquidated is worth less than 100. That has not happened ever, according to Bitfinex. They operate this kind of market since 2013, I believe. We can confirm that with our own. By now, I think we've done more than 500,000 of these peer-to-peer sort of like margin funding loans, and we can confirm we've never had a single default. We haven't had any sort of impairment, despite all the volatility over the past 3 years in the crypto markets.
So when you say that the money is always on the platform, but you only have to put up 20 to borrow my 100, is it in a holding account? Is it in? I'm still not understanding that part.
So the cash lies in the bank account of Bitfinex. I mean, so Bitfinex, like, if I don't know if you're familiar with sort of like stock trading, the way it works is you open an account and then you transfer your money to a bank account of that broker. And they sort of like have their own bank account, and then they have their internal accounting system. So they probably have a huge bank account, lots of money in there, and then they have an internal accounting system that matches. Okay, 100 of that belongs to Lawrence,
right?
And that's Bitfinex operates the exact same way. So the cash actually sits in the bank account of Bitfinex. That's where the fiat lies.
I understand. Okay, so if your trade goes bad, Bitfinex just pulls from your cash that's inside the bank or inside your Bitfinex trading account as a trader.
Exactly.
And then I would be paid back my capital plus interest. So this begs the question then of the biggest risk that I see then is what happens if Bitfinex as a platform collapses.
There you have it. Exactly. So that's what we call the counterparty risk. That's where you have to do your due diligence. Absolutely. And there we always basically look at two things. One is management fraud. So actually like fraudulent behavior. Something I think that's also known to the peer-to-peer space. Probably I'm no expert to be honest, but
certainly
So that's one. The other one, if you've followed the crypto world a little bit, you've pretty surely heard about sort of like cyber attacks. So crypto assets being stolen, hacks going on at exchanges. That's another risk. Bitfinex actually had one of those, one of the largest in cryptocurrency history. That was, I think, August 2016. However, because Bitfinex knows they operate a fairly profitable business model, they actually compensated all the losses that were incurred during that time over the following months. So if you look at what happened with these cyber attacks, basically also they're going down heavily because these platforms really know their core priority is to invest into security and infrastructure to make sure assets are being protected. So incidences go down, but still, especially the large players, they build up war chests. They have insurances to cover for these kind of things by now. So the industry is definitely maturing on that front as well. But you're exactly right. The single biggest risk that I would look at is what happens if Bitfinex goes bust.
Right. So that's obvious, and if that happens, then where is Bitfinex based? Is that a European trading platform? Or?
They're headquartered, so they're registered in the British Virgin Islands, as you would expect to be sort of tax optimized.
Yeah.
But they're headquartered, I think, in Hong Kong and Vietnam in Taipei. But they're a fairly decentral organization overall. So they have employees from all over. Their management team majorly comes from Italy and the Netherlands. We have good contacts with them. I basically speak to one of the guys on a weekly basis, but they're really decentral in terms of their organization.
And how long has Bitfinex been in business for?
I think they were founded in 2012. So ever since sort of like crypto came about.
Okay. Some of the people watching the stream are asking about what's the minimum investment through Lendary?
I think so. We don't actually set that. I think it's around $50. I think the minimum that you need to put up at Bitfinex is $50,
Okay.
and then you can sort of like try it out.
So what you need to do then, and I've been through this process myself, when you open an account with Lendary, then you actually have to go and open an account at Bitfinex. And
Correct.
I got to tell you, one of the things that has been sort of a sticking point for people trying to get into the cryptocurrency is how difficult it has been to open accounts. I mean, Coinbase has had severe issues with verifications taking weeks or months, and
Absolutely.
then lack of customer service. What's the story with Bitfinex? Like, how easy is it to actually open a Bitfinex account?
Much depends. If you want to go through the full verification thing on Bitfinex, which I can definitely recommend, at least for larger investments, it's actually quite the same story. Probably even more complicated because they take sort of KYC and AML really, really serious. So it's cumbersome for sure. I think that's also one of the, as you correctly pointed out, one of the major hurdles in sort of like bringing together the traditional investing world with the crypto world. So we try to make it as easy as possible. We also partnered with another crypto exchange called Bitstamp. They're based in Europe, I think headquartered actually in London, registered in Luxembourg. So, and they make it fairly easy, the whole onboarding process. It only takes like 5 to 10 minutes. You can do everything on your phone. And then sort of we build an automation that will take care of the whole transferal process so that you don't have to do your own blockchain transactions, that kind of stuff. Because as I pointed out, or that's basically where I see Lendary's mission. Of course, we build our software. It's an automation service. We also, I mean, we've done our job in sort of like doing the statistics, and we believe we actually perform really well when it comes to optimizing the interest rate you can get out of this opportunity. But in the end, we really see ourselves as a bridge builder. We want to bring these new exciting opportunities to the traditional world of investing. That's why we focus only on fiat investing as well, because this margin funding, you can do it with cryptocurrencies as well. But it's really, we want to educate people. We want to show them sort of like new opportunities and also be the trusted gateway to this world, and then go along the journey and help them.
Okay. So Ben, there's a couple of people in. By the way, we have there's about 65 people watching live now. I think some people are a little bit lost, which I kind of expected it would be.
Course,
so
yeah.
I'm going to try to break this down into very simple terms again. for
Sure.
anybody that's lost what this means to you. So if Lawrence invests through Lendary, what I would do is I would open a Lendary account first of all, and I've done this myself, and then I would open a Bitfinex account. Then the two are linked up through your software, through your website. I deposit money into. Does that go into
Bitfinex.
Lendary or so it goes
Nope.
into Bitfinex? Okay. Then my money is lent out to a trader. It could be lent out multiple times in a day, depending. There is no time length that these traders can hold these margin loans for. And I have watched some of these margin traders, by the way, on YouTube. Crypto is one of the guys. I think there's also a German guy he uses Bitfinex. So what they do is they take their money and it gets leveraged. They get a leveraged loan against their money and they trade it, hoping for obviously a big uptick in whatever they're trading, whether it's Bitcoin. So me as an investor, I loan my money out to a trader. That trader pays me back interest on what I loan to them. And if their trade goes sideways and isn't doing well, it gets liquidated automatically by Bitfinex, correct? Okay.
Correct.
And then, so question here is for you, Ben, how does Lendary exactly make money? What are you doing to make money? Is it kind of a management fee to do this? What?
No management fee, only performance fee. So I mean, the whole idea is we only earn if you earn. We typically or we currently take a cut of 20% of the interest that's being generated, and yeah, so only if we do a good job. So if you see your account going up, then we charge 20% performance fee, and that's our business model.
So that's it. So if I for some reason don't make money on my investment, I'm not going to pay anything to Lendary. No, I mean
Exactly.
that sounds good. I like performance fee based investing. It's one of the best things out there, obviously. And to anybody watching out there, there is definitely risk. That's one thing you need to understand about any investment, not just this one, but there is going to be risk involved. Anytime that you're going to be making double-digit returns, you need to understand there's going to be risk. What we try to do as investors is figure out what's the way to minimize that risk as best as we can. So obviously the risk with Lendary and this type of investing is not the person borrowing the money. Chances are that that's going to be okay with the real risk is Bitfinex fails. Is that a regulated entity at all? I'm presuming it wouldn't be.
I mean, definitely not like a typical bank would be. Um, they definitely they're being audited. They're pushing the transparency front quite a bit. But certainly, I mean, it's not like they don't have an audited report by sort of KPMG or something like that. So yeah,
Mm-hmm. Are they a profitable company, Bitfinex?
I would definitely assume though. I think I don't have the correct numbers, but you can look at sort of like their business model, which I mean they obviously have multiple revenue streams, but if you look at the most simple one, which is taking a commission from the trading activity, so it's simple math. Look at the volume that's being generated on Bitfinex and multiply that with the commission they take on average. That must be quite a profitable business, I would assume.
Yeah, absolutely. CEO J.L. van der Velde sounds like a
That
Norwegian or something, Dane,
Dutch,
Dutch, yeah.
I think Dutch.
And also, disclaimer in this video: I'm not here to endorse any of this. This is not paid. This is just something I'm very interested in finding more about. I don't endorse Bitfinex. I've never used the platform. I'm a Coinbase guy. I've been buying cryptocurrency since 2017, but and I haven't invested through Lendary, but I am here because I want to find out more about what you do. I find it very interesting, and let me just go through the questions here that you can
Sure.
answer real quick. What currency would somebody in the UK invest in? Is it pounds or is it euros?
It's actually we focus only on the US dollar because it's the largest market. So if you are based in UK or some other country in the Europe that uses the euro, then there's additional risk in the foreign exchange risk.
Mm-hmm.
So you have to consider that. There's ways to hedge that also on Bitfinex, and we can offer advice on how to do that. But yeah, we only focus on US dollars because it's the most liquid market, it's the largest, and also most attractive when you look at the return side.
So is if somebody makes a deposit into pounds, is it going to get just exchanged into US dollars?
Correct.
Okay.
Correct.
And then one of the other things too, when I signed up for your account through Lendary, I know you have a pretty good hand-holding process because there's going to be people that are really confused, maybe who don't invest in crypto and they're thinking, well, how's this work? So you will actually, your company will help them
Absolutely.
navigate that.
Exactly. That's sort of where we see our mission being the bridge builder and showing that cryptocurrency world can be trustworthy, and it's only a matter of education and getting familiar with the new world.
Right. Okay. Let's run through these questions very quickly because we still have a lot to get through. But
Sure.
Dale Potter wants to know, did you make money from your early trading software bots? How did you do?
Well enough that we decided to quit our jobs. Let's put it that way. And I guess, I mean, the origin story of Lendary comes from our trading strategies. So we were trading our own sort of like statistical arbitrage strategies. It's not rocket science. You can go look it up on Wikipedia. It really, I mean, it comes down to execution, stuff like that. But we were doing margin trading on Bitfinex, and when we were sort of analyzing our trades, we were wondering what these sort of variable costs were like. And then, okay, it's what we pay for the leverage, but we were wondering, hey, we're used to paying sort of like a flat fee for that. Like it's just sort of like the interest rate, right? And then we went down the rabbit hole and recognized, hey, wow, this is quite attractive to be on the other side, actually. And that's how the whole idea started. But yeah, we do have a trading background. We are still active in sort of like developing strategies. But that's really our side hustle and sort of where a lot of new ideas actually come from.
So you're still trading actively though?
Yeah.
Oh, okay. How old are you, Ben? You look very young. I just had to ask that.
Almost 30 by now. I
Oh,
know,
okay.
look young, but yeah,
You
well,
still look at.
keeping healthy.
Okay, so Paul Goodhind asks, how does the interest rate compare with traditional peer-to-peer lending? So we've kind of already discussed this, Paul, but it seems to average about 11, 12%, 10 to 12% is the average of what a lender is saying that you can return. By the way, when did Lendary write its first loan? How long has Lendary been doing this for? Because I know you were kind of had private money for a while, where you'd been doing it for family and for your own money. So when did you open this up to other
Yeah,
people?
exactly. That was July 2019. That's when we first sort of like opened the gates in a really sort of like small, crappy prototype way. Onboarded the first users to Lendary, and that's when it started. So yeah, almost 2 years ago now.
Okay. Next question. Darren wants to know, what's your secret toothpaste that you're using?
Secret toothpaste,
Yeah.
building trust, hopefully.
No,
It's really good.
toothpaste for your teeth. He said you
Oh
have
my,
white teeth.
the actual toothpaste.
Yeah,
Okay.
what is it?
Well, uh, I change them regularly. My dentist told me to change brands every now and then. So I don't know. What am I using currently? Colgate, Colgate, or I don't know
Oh,
what it's
you're
called.
using that standard
Standard stuff.
foamy
Standard stuff.
fluoride. Okay.
Just brush your
Yeah.
teeth twice a day, guys.
Sometimes we talk about, this is kind of a joke thing, but we talk about health and well-being as well as finance because I think it's important. And I actually use a German brand toothpaste called Weleda Salt Toothpaste. It doesn't have fluoride in it, so you should check it out. If your
All
teeth
right,
are
will do.
bright now, you wait till you use the Weleda. I mean, look at that. That's crazy. Okay. Patty Gilfillan, I believe is in France, says, what happens if the software crashes?
Um, yeah, in that case, you won't earn interest and we won't earn anything. So that would be worst case. But actually, nothing happens to your funds. They're not being actively deployed. So it's basically just opportunity cost. And that's part of our automation service. So as I explained before, since you don't know how long this trade will be, this sort of like loan, it can be over in like an hour. Also, disclaimer, by the way, guys, you can do everything that Lendary does. You could do it manually. It's not sort of like secretive. You can do it with your mouse at the computer. However, to get to that 11, 12% per year, you really need that close to 100% deployment rate of your capital. So you always want your capital to work in this opportunity, and that's where the automation really makes sense, because it's a 24/7 market. It would be quite tiresome to do that by hand, I would say.
You'd have to really start. It would be almost like we call in peer-to-peer lending manually picking out loans, right? Is that, or
Yeah,
is it automated at all if you did it direct through Bitfinex instead of, I don't need Lendary?
Yeah, exactly. You can also use the automated way of Bitfinex. However, from our experience, you won't reach 100% deployment rate, because probably many people are using that, and that's so our software. We always say it's 70% automation and it's 30% optimization, because we also only focus on US dollars. So we do our statistics on the order book and try to optimize rates as well.
So you're really reducing what we call the cash drag, where your money's
Yeah,
sat around not doing anything.
exactly.
Okay. Somebody was asking if I have an affiliate link. I don't think I do. It's lendary.net, lendary.net. I think I may have an affiliate link, but don't worry about it. If you feel like you want to sign up, go ahead. Question, Dale says, Ben, how much of your own money do you invest via Lendary? Do you actually put your own money through the software system?
Yeah, absolutely. So
Yeah.
let me just put it in sort of like quotes, quotient. I think it's I would say around 25% of my sort of like liquid assets are with Lendary.
Okay, so quite a substantial amount. So you put your money where your mouth is. We always like to see skin in the game, which is a
Absolutely.
good thing.
It's all about trust.
Paul Bagworth says, so I give $1,000 or £1,000 to who? Can I lose it? And when can I get it back? And we really discussed this. So we don't exactly know who we're lending to, because trades can really happen over a few minutes where the money gets deployed and then the trade is closed out. Yes, you can lose it if Bitfinex, the platform, disappears. Yes, there's absolute risk there in that side of things. You can get it back depending on how long the trade is open for, that where you've lent your money. Now, I'm presuming, so if you lend it, let's say you put £1,000 in there, that somebody borrows 100, so you could be lending to many different people, and that money is very
Yeah.
liquid. It's coming back. The trade opens, it closes. So it sounds like a pretty liquid system, to where if somebody needs to get money out of Lendary, how do they do that?
Absolutely. So actually, the average loan size over our entire user base is boils down to 1,000. So there's definitely larger loans as well. They can go as far as, I don't know, 20, 30,000. It happens at times, but the average loan size is really 1,000. So you can imagine, if you happen to have an account worth 10,000, over time you would expect that to be sort of distributed across 10 loans simultaneously. And we offer sort of like customization from the Lendary dashboard. So you actually have a lot of control over how our automation service works for you. So you can decide you can set thresholds where you say, okay, I don't want to invest money if the interest rate is below X, and I want to reserve an amount. So that really answers your question. So if you say you have $10,000 in your account and you need to, I don't know, withdraw 3,000, then you would simply go to the Lendary dashboard and say, hey, reserve $3,000 for me, and those $3,000 wouldn't be put to work with the automation service then. So there's different customization options, and it's definitely quite liquid. So the default, so you don't know how long the loan will last for upfront, but you do set a maximum time that you're willing to borrow to lend out the money. So the default is 2 days. So you will know by default, on average, the money will be returned within 2 days. You can go as far as 120 days, or as long as 120 days. And that's another customization option that you have. You can sort of define thresholds. Hey, if the rate is 5%, go with the 2 days. If it's above 15%, yeah, I'm happy to lend out for 30 days, for example. So you can kind of customize it and really sort of like build your own liquidity profile, if you want to call it that.
So, question, if I lend my money to a trader and I have a 2-day loan part, what happens if that trader holds his trade open for a week or a month? How do I get my money back?
It's refinance. It's
So it
actually
gets
returned.
refied.
Yeah.
So Bitfinex automatically refis it, or is that Lendary who's refining it?
No, it's bit so the money is actually being returned, and the new matching process starts. So I can hold a margin position for longer than 2 days, of course. After the 2 days, my position is not being closed. However, in the background, the matching algorithm of Bitfinex will automatically pull a new loan from the sort of supply side.
So it's like a secondary market then, almost. No.
Almost. I mean, I think it's really more similar to traditional trading. It's sort of like matchmaking. So after 2 days, the funds will be sort of like returned to you, and at the same second, like the matching engine of Bitfinex will pull new capital from the supply side, and I think that's also part of what makes it so easy and seamless. The trader doesn't actually have to go to the funding side and pick their own loans by themselves. They simply know, hey, Bitfinex offers me the opportunity to trade on margin, and I accept the terms of service that Bitfinex will match me with sort of like a capital provider, and that's all technology basically in the background.
Okay, I deposit money into the account of Bitfinex. You know, in the UK, we have this thing called FSCS protection, which is basically anything in a bank account is protected. Is that cash protected in any way in this Bitfinex holding account?
Not in something comparable. We have the same thing in Germany called the Einlagensicherungsfonds. So like up to 100K, sort of like everything is secured. Not that I know of. As I said before, they have their own private war chests meant to protect against sort of like cyber attacks or losses from cyber attacks. They have insurances. However, that's a case-by-case decision then in sort of like depending on how the money is lost, really. So nothing comparable on that front.
So that would be, again, all based on pure platform risk that Bitfinex fails.
Yes.
You can expect that you probably wouldn't get your money back. Okay, gotcha. We need to talk about stuff like that because it is important, obviously, with that risk side. Let's see what else. Yeah, keep your questions coming if you have them. I put a link to Lendary. It's lendary.net, Lendary.net. We've had the minimum investment, that is Bitfinex's minimum investment, which is $50 US dollars. We've talked about currency. What currency does the platform operate in? So all your money is transferred to US dollar. Do they charge any money for that, for changing it to US dollar?
Yes. Exactly. Okay. So there's sort of like setup costs. Like Lendary doesn't earn anything from that, but there's transaction cost involved in getting your money in, which sums up to roughly 0.5% if you take the entire journey. Same when you withdraw it then. So yeah, entire transaction cost to be expected around 1% for sort of like the entire investment cycle.
Okay. Dale Potter says, have you ever considered using a different name given the confusion with Lendy in the UK?
Probably, yeah. I mean, we haven't really considered changing it like immediately or soon. Again, that's probably because we don't really come from the traditional peer-to-peer world. We've only then sort of like looked into the whole I don't know, big players, Mintos, Bondera, and whatnot, because we actually. I think that's actually how we got into contact as well, because we identified, hey, actually the peer-to-peer world, they might be sort of familiar with what we're doing. Maybe this is an interesting audience to sort of like educate people about this, and that's really how we came across the peer-to-peer world in general. And we might. I mean, we just started a large marketing initiative in Asia, still with the name Lendary, because we like the name Lendary, to be honest.
Yeah, sure.
It's sort of like goes well with what we're doing. But of course, the Google thing sort of like is bugging us, and also the similarity to Lendy, of course, yeah.
Okay, understood. Next question. John Day wants to know, what basis are traders' loans selected by the algorithm? How does the algorithm pick? I guess it's just a pool of money based on interest rates, what people are willing to accept, and then...
Exactly. It's large pools. So is it regarding the trader side or sort of like the supply side? Because it's on the trader side, it's basically all automatically matched by Bitfinex. So traders simply want to enter margin or leveraged trades, and Bitfinex will simply look at the supply side and see what they can get out of there. And what our service does is we sort of like analyze the order book, sort of like the current demand and supply, and then we decide, okay, if there is money available for any of our users, we will put an order sort of like to offer this capital for a new trade at a place where we think, okay, within the next 10 minutes, we have a 90% confidence that that capital will be deployed. That enables us to improve sort of like the interest rate that we're actually achieving in the end, because we don't have to go on top of the order book, sort of like simply taking the first spot. But that again is sort of like trading dynamics. So it's really automatic matchmaking.
Okay, understood. Paul Goodhine says, what are your average losses? Are these returns figured net of losses? So they're saying, have there been investors that have actually not done so well investing in this type of peer-to-peer lending?
So no losses incurred. So as I said before, to date there has been not a single default on any of these loans, and not a single impairment in any of these loans. Because of how the euro-US dollars developed over the past year, you might have incurred some foreign exchange losses. And if you sort of like, if you invested start of 2020 and then withdrew end of 2020, then you would probably be sort of like net zero, because like all your like interest that you gained over the time would have been eaten up by the foreign exchange loss. But there haven't been any losses related to the specific investment opportunity.
And you've done, I mean, you must have facilitated with Bitfinex hundreds of thousands of loans, right? If these things are happening so often.
Exactly. Yeah. I think by now we're reaching roughly 600,000 of these loans by now that we've processed, and we've, I think, issued around. Let me actually check it out quickly, because then I can give you an exact number. Might be more interesting. So we've been. So here we are. Sorry.
That's okay. This is live.
So
this
by
is
now,
what we do.
Exactly. So by now we've processed 650 million US dollars in sort of like credit volume, which is simply, I mean, obviously makes sense, right? I said before that the average loan size is around 1,000, and we've issued close to 600K in credits. So yeah, so that's where we stand.
That would make sense. So I'm just going to shove this up on the screen right here. If you go to Lendary.net, there is a performance page. It's showing 12.97% as the current rate annualized. Year-to-date return 3.03%. Expected annualized performance 11.96%. You can have a preview of the dashboard. Some very limited statistics there, but a little bit. Do you have? I guess it really probably isn't that much to display on there, is it? Because you haven't had.
Yeah, I mean.
Maybe it might be interesting for you to put up volume numbers of how much has been lent through on. I like statistics pages, and I always give peer-to-peer lending companies a hard time over this because they don't sometimes put up enough statistics. But that might be one thing that you could put up there.
True. If you click on the there's some more statistics we can share, and maybe can get maybe can show it. If you just click on the live demo dashboard, if you just click on that, some page should appear where you get the preview, and then on the left side you have I think two things could be interesting: strategy analysis and then market statistics. Market statistics is not Lendary specific; it's overall. So again, you'll see the sort of like lending rates and the development over the time, and then the total lending volume, so which sort of like the active volume in that market on a daily basis. That's overall market statistics.
Okay.
And maybe more interesting is the strategy analysis.
I see. So, I'm just looking at that.
Exactly. So here you can actually see where your money is working, or what your money is being used for. And there you can see sort of like the duration, stuff like that.
And then the interest rates.
Exactly.
Okay.
So you have active positions.
Okay.
So yeah, go have a look if you're
Let's,
interested.
yeah, you can go to Lendary.net and look at that. Let me see what else I have here. So, is Lendary as a company, are you regulated at all?
Nope.
You're not like
That's because we're only a software automation service, just like the nature of our business. Um,
because
although
you're not
disclaimer,
actually handling any money, so at all.
exactly,
Yeah.
we never touch the money. We don't never have access to the money of the
Okay.
users.
You said disclaimer. What did you want to disclaim?
Disclaimer. I mean, what we're working on in parallel. Don't want to take anything up front, but we're working with like a couple partners from the really traditional investing space to put this opportunity into a traditional fund. Because I mean, so right now, Lendary really is open to anyone. It's what we call a managed account solution. So managed account is something where whoever is managing the account doesn't have actual access to your money. Like they can't access the money. However, they're sort of like giving you signals, if you want to call it that, in the trading world, and you're using the signals to do trading or whatever. So the current version of Lendary is a managed account solution, and the next step is really to make this a more traditional investment opportunity. So we are in talks with like a couple partners, and we're progressing fairly well in simply offering this as a sort of traditional fund, however targeted at more like professional investors, family offices, stuff like that. But there's also exciting plans on how to make this hopefully a lot more accessible in the future. Because as you said before, the onboarding process in the crypto world is cumbersome. It's the largest hurdle that we face at the moment, I would say. Yeah.
So, Paul Bagworth wants to know how easy is it to link your Bitfinex account to your Lendary account? How does that? How easy is that?
Uh, Very easy. It's basically two lines that you copy and paste in the Lendary dashboard. It's API keys. API stands for Application Programming Interface. It's just the way that software communicates with each other. And all these crypto or all the large cryptocurrency exchanges basically open their platforms with APIs so developers can develop other applications on top of that. And that's exactly how Lendary operates. And it's as simple as going into your Bitfinex account, creating API keys, which takes around like 1 minute, and then you have the information displayed and you simply copy and paste it.
Okay, let's see. So, teacher Karen says, what's the name of this investment site? It's lendary.net, Lendary.net. Because, yes, Google is not your friend. I've put that
No,
in many times, and Lendary peer-to-peer, it doesn't always pop up. So,
it's not large enough yet.
yes, you'll get there, I guess. Let's see. Let's talk a little bit, and we'll get back to the questions. I don't want to hold you up for too long, but we'll try to keep this under 90 minutes. But we are going to get to all the questions. Is your company a profitable company? Have you?
Uh,
Where are
no,
you in that stage right now?
not quite. We're still a fairly small company. As we said before, Lendary started I think almost 2 years ago now. So right now we are a core team of 3 people. We look to be a team of 5 to 6 by the end of the year. So we're currently hiring on the sort of like one technical front. So we're looking for another software engineer, and also on the business side, we're looking for sort of like a growth marketer on for Lendary. But right now, we're basically financed by business angels that invested into the company. So, also, maybe small disclaimer: Lendary is not actually the company. The company behind Lendary is called CapTech Analytics. That's the registered company in Munich, and Lendary is basically just the brand of our platform that we're operating. Yeah, so far being financed by business angels. However, we're really close to break even as we stand right now. Plus, we have this big marketing initiative in Asia, and we're hoping that that will definitely put us over the line.
Okay. Um, what do you think about Bitfinex as an actual platform? Some of the comments that I'm reading in the chat are Bitfinex has very mixed reviews. How could they
Yep.
trust that platform? What's your view on that? Obviously, you trust them because you're putting your business
Yep.
into them and
Definitely.
your own money, I presume.
Abs- Yeah, absolutely. I think Bitfinex is a great platform for traders, but for more advanced traders. I think their interface is quite complicated. It doesn't have a lot of like sort of like tour features that really sort of like takes you by the hand and walks you through the entire process step by step. They have really advanced features as well. So if you're sort of like if you're new to this world, and Bitfinex is probably not the greatest like place to sort of learn about everything. They're quite innovative on the technical side,
Mm-hmm.
and they certainly have mixed reviews, which most of that goes back to their ties with Tether. Tether is a so-called stablecoin,
Mm-hmm.
the largest. So it's a cryptocurrency that mimics the price of the US dollar, and the issuer of that stablecoin is iFinix, or the issuer of Tether is the Tether Foundation or whatever. But both Bitfinex and Tether, the Tether Foundation, they belong to the same entity called iFinix Incorporated. So there've been rumors about market manipulation, sort of like between these two entities. However, these have actually just been cleared by the New York General Attorney a couple weeks ago, actually. So it's been going on for like years, I think 2 or 3 years by now, and that's probably where many of these mixed reviews come from.
Um, Peter Vince wants to know, and we've talked about this a little bit. We'll go through this again. If Bitfinex is handling all of these transactions, why do we need Lendary? And I know you explained that. Make this really quick, but you told, from what I understand, it's about cash drag. So what we want to do as an investor is to keep our cash inside of these loans moving as much as possible. If we don't have it deployed, the interest rate returns go down. So what Lendary is doing with your software integration is trying to make sure that the investor's money is deployed as much as possible. Did I get that correct?
Absolutely. I think it's the deployment, so it's convenience really. You could do it by yourself, like you don't need Lendary to do that, but it's really convenient to have an automation service that does it for you. And plus it's the sort of service aspect and the bridge building functionality, hand holding along the way, explaining stuff. It's really these two things. Because if you just want to try out Bitfinex, I encourage everyone. I mean, it's definitely something. I'm a big sort of like believer in this new world, and that's sort of like my mission to build the bridge. So I'm happy for everyone who wants to try that out, and we're happy to be a place where people can go and ask questions and get advice, and we're happy to help them along, and no need to open up a Lendary account at all. So that's really the two things: convenience and then service, education.
Okay, and I guess what I'm going to have to be is the guinea pig because people are saying in the chat if Lawrence walks us through exactly how to do this because it's probably confusing to them. Which, you know what, I'm going to do it. It's on my list of things that I've been lazy and procrastinating because whatever reason, but I do intend to try it out. So I will just record a video on exactly how to do this. Let's see what
That's
else.
great because then you can see the updated interfaces. Because I did exactly that. I sort of like did videos on how the entire process works, and then like a couple of weeks later, the platforms changed their interfaces, and now all of a sudden, like it's not at the same on the same like the buttons are at different places and stuff like that. So yeah,
Okay, no problem. Can you be transparent about a couple of things as far as how much approximate money is being deployed through Lendary's investors into Bitfinex, or what's your investment base like? I mean, I'm presuming there's, well, I don't know. What is your investment base
it,
like? You've been doing it for two
it's
years.
it's yeah, it's I mean, comparatively, I think relatively small. We're still in the early days, so it's a low two-digit sort of like million assets under management, if you want to call it that.
Mm-hmm. Okay. And thank you for being honest with that. I think you, again, when you're an early adoption company in a very niche product, you are going to have that sort of uphill climb
Absolutely,
to becoming
totally.
a bigger company because it is confusing to some of this stuff. A lot of and two, based on what people have said about Bitfinex, and I've looked at Bitfinex. Uh, just to be clear to everybody watching, Bitfinex is a very advanced crypto trading platform. It's not like Coinbase where your average person can come in and buy some Bitcoin very easily what Bitfinex is more based on would be Coinbase Pro, but even Coinbase Pro is very basic compared to Bitfinex. And I think this is the reason you're going to see some of these reviews that are probably a little bit negative, even though there's been some negative sentiment on all of the platforms out there that offer cryptocurrency purchasing. I mean, you can do Coinbase reviews and you're going to see bad reviews out there. It's still a growing business of these platforms, and they're trying to get it right. I think Bitfinex has had some issues as far as some news things that I read, customer money being lost or stolen, and they've had trouble securing banking relationships and whatnot. But I think this is kind of indicative of where we are with cryptocurrency. It's not the easiest for those things
Certainly
to be
not,
facilitated. So, let's see. So, excuse me. Paul also says, is the interest rate a theoretical annualized figure, assuming that you're invested 100% of the time, or is the actual return based on being invested less than 100% of the time?
So what's being displayed in the performance section of the website is assuming that the capital is deployed 100%, and based on our sort of like automation service, the average deployment rate across the entire sort of like capital base is between 98 and 100%. So fairly close.
Okay. John said, is Lendary the one facilitating the stop loss on the trades ads? No, it's Bitfinex that facilitates. What you're doing is optimizing the way the money becomes invested and the choices of things that you can, like the parameters of how you invest your own personal money. Okay. How do you link the two companies together? So Bitfinex has an API key that you get when you open a Bitfinex account. You'll literally take that key, copy it, and paste it into your Lendary space that's on your account, and then the two accounts will link up, and Lendary will help you with that, because they're going to have to help me. I'm sure I have no idea how to do it. John Day said, in volatile market conditions, is there a timing issue for these trades being closed? So if we go back to March, when 2020, when the markets Bitcoin dropped like a rock, would there have been any timing issues? And because you've been doing it, right? So did you have money deployed? You must have had money deployed through investors.
Absolutely.
Were there any timing issues with the?
Not with the liquidation. So the liquidations work great. I think that's part of the reasons why these drops can be so dramatic at times as well. So what we realized during that drop is we monitor our deployment rate, right? That's one of our key metrics that tells us how well is our sort of like software doing the automation, which sits usually between 98 and 100%. And during that crash, we all of a sudden noticed, okay, we're dropping down to below 60%. And of course, what happened is all these positions where the money of our users was being actively used in, all these positions were being liquidated, and of course the money wasn't deployed anymore. And then over time, our sort of like software deployed the capital again. But it's really a great question, because it goes back to how secure is this automated liquidation mechanism? Because in theory, if there were no trading at all, then this liquidation process would not work. It only works because someone is willing to buy at significantly lower prices, and then market orders are being placed and stuff like that. But that's really the essence of how these loans are being secured. And this is where the cryptocurrency markets come back into play, because they're liquid 24/7, and all these levered trading activities are only open for fairly liquid assets. So you can't go to CoinMarketCap, go to sort of like the 100th page and pick rank 2000, like some coin. You won't be able to buy that in a levered position. You can only trade Bitcoin, Ethereum, the large coins that you would expect that have fairly liquid markets. Mm-hmm. So it's a great question. It hasn't happened. It's theoretically possible, but because these thresholds where the positions are being liquidated is so conservative, it hasn't been an issue in terms of sort of like impairment or credit default so far.
Okay. Talk to me about cryptocurrency. Oh, one quick thing, taxation. If you invest this way, you're going to have to pay tax on your returns, just like you would if you're investing in a UK political platform. How is there any type of tax form generated through all
Um,
this system? How does that work when people need to figure out how
yeah,
much
so,
tax
so
they owe?
exactly. So, I mean, again, disclaimer, because they always tell me I'm, of course, no certified tax accountant,
No,
but
sure.
we asked them, and so in Germany, at least, they say, okay, this is clearly capital gains tax, and so because we don't originate the loans, like lender, we can't provide official tax documents. What we do is we sort of like aggregate all the information into a single PDF that you can download, where you see on a daily basis what is the interest that you earned,
Mm-hmm.
and we convert it into euros or whatever you need, and then you have sort of like for the entire year you have the aggregate interest that you earned through this opportunity. That's what you would put into your tax form, and then declare taxes on that. And yeah, so far this worked out well. By now, 2 years of experience with that, and yeah, seems to be working.
Okay. Uh, who's getting the commission? Lendary or Bitfinex? Lendary charges a 20% commission on the interest that you make, correct? The returns?
Exactly,
Okay.
permanent performance fee.
Okay.
Exactly.
And then
Uh,
there are going to be some fees on Bitfinex side for currency
exactly.
exchange.
Currency exchange, and Bitfinex actually earns as well on the whole thing. They have a similar model with performance fees, or they simply take a commission from the interest that's being generated. But everything that you see on Lendary is net of of those Bitfinex fees.
Okay. Paul Bagwell says, how long do you leave your money in for? Can you make a partial withdrawal? What are the fees? So we've kind of gone through this. The money is sounds like it's very liquid. You can set the parameters of how long you want to leave your money in versus what is the minimum parameter on how long your money is deployed for in a loan? What's the
Yeah, so
minimum you
so
can set?
um, it's 2 days.
Mm-hmm.
So if you so I would say you could expect the if you want to try it out, you can deposit your money and have it back in your bank account in 1 week, basically.
Mm-hmm. Okay, so it's pretty liquid. One of the comments here, I think you'd get more British investors if you could let us trade in British pounds. The problem with that, Steve, is it's not actually Lendary that's deciding what currency. It's just crypto is being traded in US dollar. So Bitfinex, I'm presuming, requires you. Do they trade in other currencies or not?
They do. They do.
Okay.
They do have trading pairs in British pounds, in Japanese yen, and euros as well. However, these markets are tiny compared to the US dollars, so there's simply not enough demand to really have attractive rates. There's actually, but you can go to Bitfinex and you can also lend out British pounds on Bitfinex.
Mm-hmm.
However, based on our experience, I would expect that you won't achieve as high of interest rates simply because there's not enough demand.
Because a lot of the people are just trading in the US. Okay, cool. Trading in US dollar. Let's have a little chat about crypto in general. How long have you been buying cryptocurrency for yourself?
Basically at the same time that you started investing or looking at the space, around in 2017. That's when I entered the space, and that's also when I purchased my first Bitcoin, stuff like that.
Okay, now I'm a big believer in the long term. I'm a 10 plus year Bitcoin holder or hodler, as they like
Hmm.
to say. What is your thoughts on Bitcoin in general as far as the long term outlet? Do you think it's going to get banned? And obviously we could talk about this for hours, but give me a quick thoughts on the future of Bitcoin, where you think it's going. What do you think the value is going to be in 10 years if you had to take a guess? So where is it going? What do you think the value is going to be 10 years time?
Uh,
Have a stat.
yeah. So okay, between 150 and 200,000 probably, and that all goes back to the store of value use case, where you basically compare it to gold, which has been the traditional asset, that's being sort of like the social story of, I believe this will be worth something, independent of what US does, independent of what happens in the EU and stuff like that. So I totally buy the store of value story of Bitcoin. I think that what Bitcoin really is. It's of course more fungible in all these other benefits as compared to gold. And really, I mean, there's so many great interviews and talks about why the store of value story really holds up. Best one I can think of is probably Michael Saylor, of course, large investor, but he makes great arguments about that. I believe in that. In the end, which is a fascinating topic to talk about in general, it's only storytelling though. Like same with gold, right? I mean, if you look at the value of gold, 90% or 95% of that is just sort of like social storytelling. Of course, you have real use for gold in electronics and jewelry and stuff like that. But if it were only used for that, the price wouldn't be as high.
No.
So I think that holds for Bitcoin. It's just sort of like the modern gold, and the price. I don't know. I mean, throw a dart. But I think these two assets will share that store of value story, and whatever the market will be then.
So you thinking maybe 200,000 in 10 years. I'm going to make a prediction. I think it's going to be much higher than that. But
Right.
I'm a very optimistic Bitcoin holder. I'm thinking, $500,000 to $1 million in 10 years. We'll have to come back in 10 years
All right, definitely.
and then
We'll do.
see. Do you personally own any other type of cryptocurrency aside of Bitcoin? Because Bitcoin is the Colgate of cryptocurrency.
I actually liquidated most of it and transferred it into Bitcoin. I used to be a lot more bullish on other cryptocurrencies as well. And I mean, there's exciting stuff happening all the time. But if you look at where is money being generated in the crypto world, like what are sustainable business models in the crypto world? So far, I think there have been two over the past 10 years. One is mining. If you have access to cheap electricity, you can simply invest energy, and you are being rewarded with Bitcoin or whatever cryptocurrency you're mining. That has been quite sustainable because energy was available at cheap prices, still is, so that's why it's being mined. One sustainable business model. The other one is operating a sort of crypto exchange, traditional business model, super traditional business model, just for this new asset class. Very successful. I mean, obviously we all know that Coinbase is going to go public very soon, and in all their filings, you can see how crazy profitable that business is. So that's definitely an interesting business model. What's come about in the past sort of like 2 to 3 years, or past 2 years, is this whole DeFi, decentralized finance world, which I think is basically traditional ideas of finance, traditional banking stuff, moving onto the blockchain world, cryptocurrency world. I think that's going to provide new interesting business models. That's actually where I have a little bit of other investments in utility tokens of sort of like, it's basically crypto banks. What these banks, so very adjacent to what sort of like Bitfinex does. If you hold Bitcoin, for example, but you don't want to sell Bitcoin, but you need cash, what you can do is you can go to these players, you can deposit your Bitcoin as collateral, and they'll give you a loan to value of, I don't know, 60, 70% to that. And it's just like the traditional banking world. And that platform refinanced that with anyone. And they have sort of like utility tokens. So I have a look at Nexo and have a look at CoinLoan. Those are interesting in my opinion. But other than that, I've been very bullish about Ethereum, stuff like that before. But then again, over time, it's the analogy to the internet protocols is quite reminiscent, I think. I mean, the amount of value that was being unlocked by all these file and information exchange protocols, HTTP, FTP, all these protocols enabling transfer of data, is huge, probably the biggest sort of like value creation infrastructure ever. However, these protocols by themselves, they didn't capture any of that value. And the same kind of goes, I think, for many of these large promises of, hey, we're making everything decentral and we'll have all these decentralized apps. I can't really derive a fundamental reason why the token has to capture a value. I mean, it's complicated. I could talk hours about that,
Yeah.
but there's like, what I think blockchain is really cool for is creating marketplaces where it hasn't been able before. So all of a sudden you can I don't know, with blockchains you can create marketplaces and exchange stuff that you wouldn't be able to do before because missing trust and stuff like that.
Yeah. No, I totally understand. My personal investment goal with these altcoins has been ride this bull run, which I think hopefully is going to last till maybe the end of 2021. I'm hoping sneaks into 2022 so I don't have to pay short-term capital gains tax, then sell it all,
Exactly.
everything except Bitcoin, shove the rest of the money into Bitcoin, and then just ride the Bitcoin wave for the rest of my days on planet Earth. But so I'm totally in agreement to you. A couple of other questions. Again, we've had another question about the returns. Darren said, what type of amount losses, a percentage, or a percentage of total investment plus return should a typical investor expect? Darren, we're talking about anywhere from 10 to probably 12% annually as the sort of expected rate of return. Natalie G, welcome to the stream, Natalie. Is the daily interest able to be withdrawn immediately? So how does that work? So probably not, right? Your account is just one total balance. So
exactly, total balance, and then you have your active position. And that's also a cool thing about this really liquid profile. You have quick compounding because your interest is being paid daily. Once enough funds are available again, our software will, again, if you don't reserve the amount because you want to withdraw it, of course, that's at your discretion all the time. But if you simply let the software do its thing, you'll be paid your interest daily, every single day. Right. And then that interest will be, again, offered as a loan in the market and hopefully earn some more interest.
Okay. So yeah, if you got money in your account, I mean, I presume you can just withdraw whatever you want. So David said on the FX side, I can send Bitfinex British pounds, they'll convert it to US dollars for 0.5% fee.
Not exactly. That's they don't offer a foreign exchange sort of like market. You can simply, I don't know, buy any cryptocurrency and immediately exchange it again. That's basically the way it works, and that's how the 0.5% come about. So basically, what would happen? You can send British pounds, 100 British pounds. You can technically do that, but nevertheless, 100 pounds to Bitfinex, then you'll exchange 100 pounds for Bitcoin, and then immediately sell Bitcoin again for US dollars, and that's we facilitate that process with the automation.
Oh, okay. So Lendary is going to facilitate all of that. People don't have to worry about how they get those US dollars.
Yes.
They just send their cash, and Lendary will facilitate the rest of it. Okay, that's good to know. Paul said, what is the sign-up process like for both companies? So I've been through it. You basically sign up on Lendary. You go through their process, verification check, all of that good stuff. And then from there, you would go into... Do you do the Bitfinex sign-up through Lendary's website, or is that separated?
It's separated. I mean, we have our step-by-step guide, which explains basically everything that you need to do. But yeah, it's separate
Okay.
from that.
What type of identification checks are involved on both sides as far as Lendary and Bitfinex?
None on Lendary, because we are not legally required to do sort of like official KYC stuff.
Yeah, you're just a software company, basically.
Software company, yeah. Exactly. On Bitfinex, it's what you typically would expect in the cryptocurrency world. So like a piece of identification, passport, driver's license, personal ID card, something like that. Then if you plan to make direct deposits from a bank account, then they also want to see the bank statement. You don't have to show any numbers there, but what they want to do is they want to make sure that that bank account is in your name. So stuff like that. Mm-hmm. And proof of residency, I think, is another one that they require. I think those are the three major ones, exactly. And then you have to sort of sign like that, of course.
How long does it take normally to get the Bitfinex account opened? Because I know Coinbase have had horror stories where it's taken weeks or months for people to get accounts.
Yeah, I mean, back in 2017, it's the same for Bitfinex, basically, when the huge inflow of new users came about. So it's not as bad with Bitfinex, I would say. Also, I mean, if you let us know, then we can also let our contacts at Bitfinex know, and then they try to expedite the process a little bit. But usually, if you go for the full verification, I would expect something like 2 to 3 days until the account is fully verified, dependent on the documents.
Okay. That is not too bad. And let's see, when do you expect to become profitable?
Soon, fairly soon. I mean, that's the goal for this year. But we're bringing on new people for sure. But again, we have large hopes on Asia, because the Asian culture is a lot more close to, I don't know, new trading opportunities. Of course, a lot younger when you look at the investing culture there. So they're trying out new and innovative stuff a lot more. And we found partners that are just launching a new or launching our first real marketing campaign in Asia next week, actually. So let's see how that goes. And plan is to be profitable with Lendary by the end of the year.
Okay. So here's me thinking, you've obviously done well trading in the past of your own trading account. Why did you want to start this company uh, anyway? Why don't you just trade and make your living that way?
Um,
What is it
well,
about it?
Um, well, always been interested in entrepreneurship, to be honest. I mean,
Mm-hmm.
building stuff is something that I'm really passionate about, and also trading. Trading can be very tiresome, at least for me in my personal experience. So, when we started doing trading stuff, we sort of said, okay, we'll never do a manual trade ever. That's sort of like, of course, we do every now and then play around with stuff, but that's not serious investing. All our serious investing is automated, because we say, hey, in the end, we're quantitative guys. We believe in statistics, so we build our things. But if you do that full time, it's basically like academic research. It's
Mm-hmm.
like 95% of the stuff you try fails because it just simply doesn't work. That's quite frustrating as well. So I wouldn't just I wouldn't want to do that like the entire day. Plus, I'm a big enthusiast about building things. Like, I mean, I'm no programmer like from my academic background, but I started sort of programming websites when I was 10 years old. By now, of course, I have a team that's far more capable in building up these things. By now, I only sort of like introduce feature ideas and they take care of the good stuff. But yeah, building things, software is great. I enjoy that very much, and also I enjoy sort of like the bridge building thing. Like as compared to the traditional finance world, where it really comes down to traditional trust, your network and stuff like that, you can have an amazing strategy that performs exceptionally well. It's still going to be super hard to gain any foothold. Like, it's if you don't have the correct network, it's just really hard to get started. And I think also, like, still being young, we're far more credible in the crypto space because it's
Mm-hmm.
also a young space, and that's sort of like where a good match exists.
Yeah, absolutely. And one thing I will say about I really enjoyed using your website. It's very clean. I like the way it's presented and laid out. It's very nice. So keep up the good work. A couple of other questions, then we're going to wrap it up. Are the interest rate quotes on the performance page net of fees?
Not net of our performance fees. No, I think
Okay.
they're not.
Okay.
So take 20% of that.
Okay. The other thing too is people are asking, am I currently using your company? I do have an account set up, but I have not currently invested anything. I'm going to be investing some money, and I'm going to do a walkthrough of exactly how this thing works because it's going to be new to me too. But if you want to check it out, it's www.lendary.net. Ben, do you have anything else you want to tell our esteemed hangers on? These people have been here for an hour and 34 minutes. We have this
It's
running
crazy.
joke that the stream is always less than an hour. That never happens. But
Never ever.
um,
Well,
yeah, anything
first of
else you
all,
want to say?
well, thanks for sticking around for sure. I mean,
Yeah.
it's great to have you guys and listen to the both of us sort of like talking about that. Like, let me know if you have any questions. I mean, feel free to head over to Lendary and simply enter sort of like a question in the chat. Again, Lendary is also a place where we want to educate people about this new space. We want to help build the bridge between the traditional finance world with the crypto world. So that's part of our mission. Happy to do so, and yeah, of course, always happy to hear about any feedback that you might have,
Hmm.
how to improve everything. Of course, we're trying to make the onboarding as simple as possible. And yeah, overall, I think I mean, that's also, I think, part of the origin story of peer-to-peer lending, right? Is the whole democratization of investing and finance. And I think that also comes from providing feedback with each other, because Lawrence, stuff like you do, like just like getting transparency out there, talking to people. So I'm always curious to find out about new things, and hopefully one day I'll learn something very cool from you guys, probably from reading your blog, Lawrence, and then yeah.
Yeah,
That's
absolutely. So one of the things I would like to personally suggest is sometimes the risk to reward can be difficult to assess. I would like to see on that performance page those numbers based on including your fee in there, because I think it can be a little bit confusing to understand, well, exactly how much interest can I expect from the risk that I'm taking right now. That's a little bit unclear to me as to what the risk to reward is. So that would be my one suggestion that pops off the top of my head for you to
sure.
include, Ben. That, because I'm very much into transparency. But I'm going to be doing, I will say within the next week, a walkthrough video on setting up this Lendary account, how it works, and I'll just be very honest about how difficult it's been. I didn't find the account setup with Lendary particularly difficult. I'm thinking the Bitfinex side is going to be a little bit more complicated, but if I can walk people through it, that will be better. Darren wants to know, is there going to be an Oktoberfest in Munich this year?
Well, if only I knew, right? I mean, they're selling the tickets right now. Fingers crossed. Vaccination is going fairly well now. By now, it took us long enough in Germany, but I mean, fingers crossed, right? I yeah, it's so hard
You
to
don't
predict.
know. Yeah, it's
I
unpredictable.
simply don't know.
It's like the price of Bitcoin. It's unpredictable.
Exactly.
Okay, so there you go. We're going to wrap it up again. Please hit the thumbs up on the stream. Subscribe to the channel. How do people reach you, Ben? If they want to ask you questions, how can they reach you?
We have our little chat bubble on the website, for example, and other than that, simply write me an email, benjamin@lendary.net. So that should be fairly easy. Happy to jump on a call. Also, if you're interested in any follow-up discussions. Yeah.
Okay, benjamin at lendary.net.
Exactly.
You speak very good English too, but I think it's
Thanks.
incredibly impressive that people from different countries can conversate so well. I know our German friends are usually very fluent in the English, so I'll put the email address in there if you have any questions. Fire them off at Ben. I'll be talking with him further as I go through this process of investing, and everybody's saying thank you so much for coming on here and speaking transparently. I'm sure there's still some confusion by some people, but hopefully we'll try to get that declouded and demystified as we look for
Of
new
course.
places to invest. So we're going to wrap it up. Thanks everybody for sticking it through. We'll be back here, I believe, next week. Plan is Stuart Law from Assets Capital will be on the stream live. That's the plan, April the 15th. Not 100% confirmed, but that is the plan I've heard from Stuart and his people over at Assets Capital. So we'll be drilling him about the Assets Capital business. So hopefully you'll join us next Thursday, same time, 7:30
All right.
p.m. UK. So
Cool.
thank you again, Ben, and we appreciate
Thanks.
you. Really
Definitely.
appreciate
Thanks
it.
for having me, and keep up the great work.
You're very
Awesome.
welcome. Okay, take care.
Guys, take care. Bye.